Back, we got the market, which of course is the GIFT Nifty is not doing very much. It's actually absolutely flat, but maybe a little bit more. When we started at 8, was down about 3 or 4 points. We're down about 25, 26 points. Dipan Mehta, director at Elixir Equities, is with us to run us through what he's making of things. Dipan, good to have you back on the program. Thanks very much. Things have gone to sleep in a way, right, as far as markets go, except day before yesterday, that Sensex expiry, we had a bit of a pop in the last half hour, but otherwise sideways, ranged, and very, very quiet out there, Dipan. And actually, why not? Because you don't have really that many triggers or anything, right? Earnings are going to start to come in, and generally what we pick up in terms of expectations and otherwise is it's going to be a pretty muted set once again.
Yeah, Prashant, good morning. I think you have answered your own question. And I'm also thinking that it's fine if the market is in this position. Only thing you need to add over here is the Trump tariffs and how that will play out for India, because that's one big uncertainty. And hopefully over the next few weeks or so, we'll be over and done with that as well. And I completely agree with you that this quarter may be a bit dicey. The pre-releases have not been that great, and valuations are still quite expensive. So the way I look at the picture here is that for the markets to move up higher, like if you want a 5-10% type of up move in the Nifty, that will not happen unless we have a clear-cut, kind of vision that the earnings are going to go to the next level. At 4.5% type of earnings growth for Nifty, it's not going to move the needle too much. There are downside risks if there's any adverse development on the Trump tariff side. So I think one needs to be a bit cautious at this point of time. And then, of course, during earnings season, there's a lot of stock-specific volatility.
Dipan, hi. Good morning. I don't know if you caught some of our conversation with Viceroy Research just now. Vedanta is the new talk in town, right? Just for shareholders, shareholders could be very confused, wondering what, because they were perhaps waiting patiently for the demerger to go through, value unlocking, as Mr. Agarwal says. Now comes this research report. What would your advice be?
Yes, good morning. First, a disclosure that we are invested in Vedanta. And I think that the market clearly has given the response over here. There was hardly any movement. There was a knee-jerk reaction, but a lot of lost ground was covered over there. I still feel that our regulatory bodies are strong enough to detect any kind of overstatement of assets, if at all there are. And of course, Vedanta has got a very good set of auditors as well. There may be issues with the holding company, but then Indian shareholders are not really concerned with that per se. And the management have been making drastic efforts to reduce debt, and that certainly has been reflecting in the sentiment in the stock and the recent appreciation which we have seen. And end of the day, I think there are some great assets, be it in copper, aluminium, and zinc. And whenever the commodity cycle starts to move up, this could be one big money-making machine. And now even silver prices have moved up, so that's very positive for Hindustan Zinc as well. So I'm not too concerned about this report, and I would remain invested. And of course, whenever the value unlocking does take place, you can easily get a pop on the total investment which we have made in the consolidated entity.
Interesting times, Dipan. If this report came out a few years ago, a couple of years, I think September 2023, if I remember correctly, that time the position was very, very, feeble. Now, in fact, they've done quite a bit, actually, though the stock still trades at valuations of less than 5 times EV on EBITDA. But one would argue you don't know what the promoter will do next. So rightfully so. But as you said, the assets are good. I think there's a ramp up of a lot of assets. H2 of FY26 could be one of their best for them. So let's see how that goes. And let's see whether regulators give them a green signal to NCLT. I think for the time being, maybe the street could look past this report from Viceroy. That said, let's talk about the big boy, Reliance Industries. It saw a bit of a downtake in the final hour of trade yesterday. What's your view out there? Because in the last 6 months, it's been in splendid form after underperforming the prior 6 months.
Yeah, Nigel, good morning. Bit confusing in Reliance because, you're buying into so many businesses. And I've always maintained that the real kicker will come in Reliance when they kind of, unlock the value over there. And whether Reliance becomes a holding company or you get, kind of a split entity where you get the separate shares of each of the businesses which are there. And that's the key driver. Stock prices can go up and down because of various reasons. And Reliance has done well because maybe investors expect improvement as far as the refinery business is concerned. But for me, I think investing in Reliance is like buying so many businesses. Whereas as an investor, I'm interested only in one or two of the entities or one or two of the subsidiaries. And there's no way to get a complete play on those subsidiaries through Reliance Industries itself, because there could be other underperforming segments within the company as well. So that's a bit of a confusing thing. But anyway, look, remain invested in Reliance Industries and hope that the management takes the right decision when it comes to value unlocking.
Dipan, it's a TCS day. Earnings season is kicking off. And I know we've discussed this for a long time, that growth is elusive and all of that. But sometimes, they become trading opportunities, these IT stocks, if nothing else. What are your thoughts? I mean, doing anything before the IT earnings season at all, either with TCS or any other company?
You're right, Surbi. It's a trading opportunity. Even when you are bearish on a sector, there can always be surprises because the street has an expectation. And if the company reports numbers beyond expectation, look, a 5-10% up move certainly can take place, and similarly other way around as well. But either you focus on such trading opportunities or you focus on great long-term stock ideas. And I think that entire Indian IT services industry, the traditional ones, they are out of steam completely. They are secularly, I think, in a stagnation mode. And last 5 years certainly have been not that great in terms of returns or profitability. And I don't know anything which may change and take them to the next growth trajectory. So I think from our point of view, it's an avoid.
Got it. All right. Dipan, India Shelter, do you track that one? That's the one that saw some fund-based buying 2 sessions ago. And yesterday as well, it moved at very, very good volumes. Have you looked at this name?
I will many, many months ago, but I like the basic business model. They are an aggressive home finance company and focusing on the underbanked or the lower end of the segment over there. And that's always positive. And they have a decent track record when it comes to collection. Because when you are, focusing on that segment, the mass market, the lower middle income, your collection strategies are to be extremely strong. And I think they seem to have achieved that. Reasonable valuations as well, I feel. And of course, we are very positive on NBFCs because I think their cost of funding certainly will go down and that should improve the net interest margins. And in a way, I think companies like India Shelter and there are others in the space as well have a good runway for growth because of limited competition per se.
Dipan, you want to come in on this report?
No, I think it's a good report and we are also quite positive on the housing finance companies, and within the entire spectrum of NBFCs, housing finance perhaps is the safest segment. And these companies, I think, by focusing on the underbanked, the underprivileged segment, certainly have got an opportunity for growth. And all of these companies, I think, have great prospects so long as they're able to manage their collections and NPS better. And valuations also are reasonable. I think the track record last 4-5 years also been quite impressive. So I would say that if you're looking at increasing exposure to the banking sector, banking NBFC, these category of companies, the new generation, I would call them new generation housing finance companies, certainly can offer outperformance.
Got it. Okay. All right, Dipan. Appreciate you joining in. We look forward to having a chat with you and have a good day ahead.